Okay guys, thanks for coming to my site. Now I'm going to show you how I trade this SPY 3-minute. Okay, there's two things I do. Number one, I'm holding an overnight trade, and that's done using an out of the money call or put that I hold overnight and sell the next morning. Or B, I'm doing a same day trade utilizing a debit spread call or put. Now, what am I talking about here? Let's go to the chart. I'm following something called a CM line. So let's go over here. So you can see I have a bunch of indicators here, and this is the CM slingshot system. See how it's like going there and back? It's like green and red and shows up and disappears. This is a trend. This is a form of a trend line, and I'm following this. So it's a CM system, and so I'm following this line right here. See that green thing or the red thing? Not the little trailers going around in the middle of it, but just basically green and red. Okay, so let's take a look at what I'm doing here. So when it's green, things are going to go up. When it's red, things are going to go down. So if you're looking in here, right, red goes down, green goes up. Okay? And I'm using the 3-minute time frame, and the way I do that is you go down here, and there's a time frame you select, and I believe that is right up here at the very top frame of this recording. So right up here, you could click this and you can get the different time frames. I'm working on the 3 minutes. So, okay, let's get into it. Why is a straight call or put used only overnight in the same day trading a debit spread? This is because overnight there's explosive movements, okay? And a call or a put can like explosively move. Let me give you an example of something like that happening. So I gotta find a time where there was a big movement overnight. Okay, so that was supposed to be the case, but it did the reverse. But all right, I'm just going to use that as an example. So right here, between close and open the next day, you could see there was a gap jump. Now that tends to bring very big returns if you're going the right way, as in like a call or a put. And that's why I go overnight with a straight put or a call option, okay? Because I'm not holding, because right here, down here, here's the every 3 minutes in the day. So a day would go from, see where this is, all the way to right here, which is the next day down here. So you see on the bottom 5, 6. Now overnight hold, call or put, tends to have a bigger movement, and since I'm going like 1 day out with options, they tend to experience erosion pretty quickly. So I just want to get out the next morning when I'm holding something overnight. Now, when I have something like this, let's say I'm just doing a same day option, which is the color changes at some point in the first, say, half hour of the day, and I tend to stick with that, and I will do what's called a debit spread. Okay, and I will tend to hold that till the end of the day, unless I get a very big signal with this purple line with a dot on or something to get out. So, and I'll show you as I go with this. But anyway, let's say it changes here on the next day, and I'm not holding it overnight. And so then I will do a debit spread and just hold that till close to the end of the day, and then exit out of my position about a day or two out. So let's take a look at some more specific examples. Let's see. Now, when I'm buying for the next day, I do that by looking at the CM line. If it changes color in the last 2 hours of the day, this would signify that there's going to be an overnight reversal or gap. Okay, let's go through with an example here. So now, for example, right here, it was red and it turns green during the last 2 hours. See, 1354, because my day here in Chicago ends at 1500. Now, this turned green, and now usually what I would do would be to go ahead and buy a call for the next day, because this tends to say it's going to go up the next day. But now if we look down at these two bottom indicators, and if I put a ruler here, starting about right here and come straight down, if I put a ruler here, it's showing me down pressure. So I would ignore that one, okay? Because usually when I see the last 2 hours a different color change happen, I want to see this trending up, and I want to see this indicator trending up. And what indicators are these? This is the wave trend HLC, and this is the Scholastic Slow movement. You could just like save this page and just look at these indicators on TradingView. I myself pay about $25 a month because I have some extra indicators, but I tend to find, some people say don't trade on just one or two indicators, but I tend to trade on about 5 or 6 to get more of a complete picture. But let's look at another example towards the end of the 2 hours of the day where something would change over. Okay. No. Let's see, was this at the end of the day? Okay, here's one. Alright, so it's been going back and forth here the last 2 hours. So I tried to watch it until like the last 15 minutes. Now you can see at 14:48, it's green. Okay, so let's double check. Alright, so that's like, we want to buy a call and hold it overnight here because it's green the last 15 minutes here. Or the last 2 hours it was green and red, but green tended. So now we're going to come down here. So you see that's like that's before it's before close, before February 1st. So now we come down, we look at this line, and the trend is up. We look at this line, the trend is up, and that follows along. If you draw a straight line from that down to these two indicators, the trends are both up. So I'm going to buy a call and hold it till the next day, probably till about 9:30 or 10 o'clock Chicago time. And there we go, boom. Now you want to get out before there's erosion, and I have like a N+1 or an N+2 expiration 1 or 2 days out, that means. And that's how that works. Let's look at another example of how I do this. Let's see. I can't really tell what that is unless I move this. Okay. Yeah, once again, that's something that wouldn't work. You see how it's like green towards the end of the day? But then if you come down and look at the trends on these two indicators, they're both moving the opposite way, so that's a don't touch that. So, okay, so that's how I do those. Let's look at more examples over here. End of day, see that's red. See, I'm showing you all the examples of what you shouldn't use. That just tells me don't touch that. I'm trying to find out one that's obvious where I could show you where that does work. Okay, right here. So it's the last 2 hours, it turned green. If you look down here with the time, it's after 13:30. Okay, and I could see the two lines are rising. Okay, they're in the rising pattern formation, so I go ahead and buy it. Then the next day I would sell for a profit. So that's, like probably about 40 to 50%, since it's like a day or two out expiration wise. So that's one thing I do. And now the other thing I do is same day trading. All right, where am I at? 7 minutes on the recording. I got 15 minutes total. So let's look at the same day trading. Now, same day trading is when the CM changes in the morning colors, like, after 8:30. So right here, it's changed the day before. We don't use that here. Okay, here's an example. So on January 26th, it's like red for most of the day before. Then suddenly at about 8:30, it turns green. Ding! That's something we want to get in on. So what I do is I open up a debit spread, the debit call spread, and I hold it until close to the end of the day. And then towards the end of the day, I close it and I get out, and I make about 20-30%. Because basically with a call debit spread, the erosion is working for me, and especially if it's above my in price, as the option runs out of time for the other buyers, I start making more money on the time decay. Okay, especially if it's above the price that I bought it at. So let's look at another example. What time did this turn red? That was at 10:30. I ignore that. All right, so here's an example. Remember this one? It was a no-go because it was green at the end of the day, but the indicators are pointing down. However, the next morning at 8 o'clock, this turned red. So then I get in with a debit spread, put spread. And I get in, and it's going down, and it's going down. And I will look at this purple line. If I see dots, about an hour or two after I get in, maybe an hour, I will exit. So I still made pretty good money on this. I see the 2 dots. That means it's going to go up there from there probably. And I'm out. Now, I didn't necessarily have to do that because I got in the debit spread here, and I could have still gotten away with getting it out of it here, although I would have lost a little bit more money. But, the good time to get out is with these two dots down here. Now let's move on and see what else we have. Let's see, I need something that changes at market open. That's a little bit before. I use that as another example. Let's see, third. Let's see, this is okay. So this is about 8:51. I could still use this one because it's within the first half hour. See, you could see it was green the day before, green and open, and suddenly at 8:51 it changed over. So I get into a debit put spread and on the SPY, and I just hold it until I feel like getting out. And it's coming down. I tend to ignore the signals like right away. The spike breaking the line is usually an out signal, but that's since I just got in, I'll just hold on to it. And it's coming down, and I see a couple dots, that means get out. And then especially when I see this indicator right here break this line here on this indicator, it's a super oscillator. You can see the name of it over here. It breaks the bottom line, and it usually tells me it's time to get out. And especially when I get one of these, like a buy signal, it tells me to get out. So I do pretty good on that. So, all right. So my basic gist on this is I will explain every day my thought process is on why I get in and why I get out. And the getting in is usually pretty straightforward. If I do get in, it's before market close. And if I get in again, and if nothing happens that night, I might get in the next morning in the first half hour of the trading day. But then the tricky part is you got to keep checking back to see when I get out. I tend to get out whenever, so you might want to constantly check back. I'm going to have to figure out some other way to get hold of you. I used to use Twitter, but all of a sudden became X, and Musk got into Twitter, and so now I don't like Twitter. I got to figure out some other system where I can alert you guys my exit. But I guess if you just want to follow me or just figure out your own system and just use me for ends, that's good too. And we'll just figure it out from there. I'll see if there's anything I wanted to cover here. Oh yeah, how do I manage my money? I'm running at about an 80% win rate. Okay, so if you keep investing 100% back into this pick after pick, you're eventually probably going to bust out. Because even without 8 out of 10 win rate, those 2 losses are going to pop up at some point and just bust you out if you're going 100% back in. What I would do is if you have 10 or 15 piles of equal money, and just go from there. Keep it static, flat bet. If you do this, the curve continues to climb. 80%, you could absorb a loss here or there and just keep climbing from there. So my advice is just come back here. I'll make my picks, every day before 4 o'clock or in the morning, and I will explain to you what I'm thinking and how I make my decision before I get in. So you're not just getting here, buy this, sell this. You could actually see how my mind works and why I'm picking it while I look at the graphs and show you how I do it. All right. Thanks a lot for watching, guys. Bye-bye.